But what we have seen is very, very substantial orders. And I swear to you, I've said this before, I believe there's going to come a time where you get some very wealthy people. I don't know how many billionaires are there in the United States now. 1,000, 2,000, 3,000? I don't know, a lot. You're going to get a couple of very wealthy people that say, give me every single thing you have right now, I'll take it all. And you're going to get people that will do that across the country, and bang, it'll all be gone. And I mean that.
So that sort of development, I mean, think what that would do to us. Think what it would do to the oil price. Think what it would do to markets. Think what it would do to gold. These developments are very, very serious and very, very disruptive, and would probably override that schema that I gave of a market which is likely to more or less repeat the course of the 1929 to 1932 mega bear market.
Back to the markets, this thing's going to go down big, and it's going to go down hard. But again, none of these politicians are talking about close all the bases overseas like we did for Occupy Peace. It's one of our top. Bring home the troops and secure the homeland. Stop spending the money on the military-industrial complex and rebuild America.
In today's weekly recap, three financial experts, Andy Schectman, Gerald Celente, and Alasdair Mcleod, discuss the latest macroeconomic news and share their gold and silver price predictions. We watched hours of footage so you don't have to. In this video, we'll show you the best clips of the week, but first hit the like button, subscribe to the channel, and share this video with a silver bug. Enjoy the episode.
It's now done again. And I love that you phrase it that way and mirrored it that way. That's great. And it's true. And but that's really where we are at right now. This is a high stakes game. This is about repositioning, and there's no reason to believe that any of them will be honest about it in their aspirations. But the reason they're not bitching, those countries, is because they're accumulating. They're using this against us. They're using it against us. And I think that the manipulation that we see, the drive-by shooting that we've seen on COMEX over the last couple of weeks, where they knock the price down, and you can only imagine they fleece the managed money. You can only imagine how much managed money selling has been then switched into commercial bank buying. This is the rinse, wash, and repeat cycle they do all the time. They suck in all of the hedge funds and the speculative buying by the managed money. They absorb it, and once it slows down, they step on the price, and it flips. And then they create all of the margin calls, and people sell. And look, these hedge funds have investors that they have to appease, so that they're not in it to absorb pain. They're in it to make a profit and get out when it flips the other way. But that's what's happening, and this is being used against us because, like I said, these countries are incentivized, coordinated, wealthy, sophisticated, and they know this is how you beat us. You don't beat us in a war with missiles and airplanes and aircraft carriers. You beat us by blowing up the biggest commercial banks on the planet because they're stupid enough to be naked short massive, massive, massive amounts. And that will happen at some point. I'll tell you what else I think is going to happen. And I do really, truly believe this, Dunnigan. I think there's going to come a time where there's going to be something that wakes up the very, very, very wealthy people in this country. We're starting to see it. The order sizes that we're doing now are really big. We don't have the massive amount of volume that we saw in other parts of the last 3 years, where the silver squeeze and everyone just getting a piece of it to make a whole bunch of money. It's not sexy enough. The instant gratification is not there in gold and silver yet for those people. And so they've moved on to things like Bitcoin and Nvidia and Apple. Okay, I get it. Fine. But what we have seen is very, very substantial orders. And I swear to you, I've said this before, I believe there's going to come a time where you get some very wealthy people. I don't know how many billionaires are there in the United States now. 1,000, 2,000, 3,000? I don't know, a lot. You're going to get a couple of very wealthy people that say, give me every single thing you have right now, I'll take it all. And you're going to get people that will do that across the country, and bang, it'll all be gone. And I mean that, because there will be a wake-up call, and you can see it. You can see it with what happened on Monday morning. And again, I always say you'll wake up to a new reality on Monday morning. Shocking it happened on Monday morning. Shocking that all of these insiders sold their shares leading up to the biggest one-day drop in the history of the Dow Jones. And And the razor's edge that we are living on, where the Bank of Japan says they're going to raise rates a little bit, and as a result, you start to blow things up. The biggest one-day decline on the Japanese Nikkei, the biggest point drop ever in the history of the Dow Jones. And many of the, like for example, the worst day in 57 years in Taiwan, the biggest drop in South Korea since 2008. This wasn't just isolated. And now Japan says, well, we're not going to raise rates anymore. Everything, it'll be okay. It'll go back to normal. We're that close. And as we said a few weeks ago, 1/8 of an inch separated chaos and calm. Do we really think it's going to be calm leading up to what amounts to the biggest high stakes election in the history of this country? And even no matter who wins, is it going to be calm after that, or is it going to be more chaos? Maybe they're able to keep the lid on things until the election, and then it just goes nuts. I don't know. But I do believe we're getting late in the game. And I think the biggest issue people will face will be getting metal. Because when the biggest, most well-funded and well-informed money on the planet is going to these great lengths to siphon away everything, including doré bars and concentrate in unrefined form to not move the market, what's going to happen when it just becomes obvious, painfully obvious, that this is the direction that the world is going, that there is no safety in traditional assets and precious metals take on a whole new image with wealthy people in this country? I think it's going to happen. In fact, I would bet my life on it. And I don't say that to inject urgency. I just say it because I really do believe it. And we're starting to see much larger orders and concern from very wealthy people that, we would never see that back in the days. You get 1 or 2 orders like that a year. Now they're happening every week. And that's what's different now, at least from this side of the table. The volume has been low. It's starting to heat up. I think people feel something is wrong. People feel it. They're tingling, even if you can't articulate it. There's just craziness everywhere. And, just turn on the news and watch it for 10 minutes and you'll see.
Now, Alasdair Macleod gives his bear case for TradFi markets and shares an important message to gold and silver stackers.
About this in my article for Thursday, which, this is the 6th of August, Thursday, the 8th of August. It will be released on my Substack. The point about cryptocurrencies, and particularly Bitcoin, which is seen, if you like, as, the people's money, replacing the state's money, which is fiat currency. The problem with it, there are lots and lots of problems with it, really. In terms of the concept, it's an interesting take, if you like, on the contrast between something which you call a currency, though it's not used much as a currency, which has a limited quantity, a fixed quantity, compared with a fiat currency, which is infinitely expandable at the government's behest. Now, we know that story, and it's a story which is pushed and pushed and pushed. And, anyone sitting down with a computer sort of tries to work out, what's going to be the expansion of, the amount of dollars in circulation, and what's that going to, and you look at it one versus the other, and you come up with a solution. Well, this is going to take Bitcoin to $250,000 or $1 million or $10 million, and people start plucking figures out of midair. So much so that it's extraordinarily widely held. I was looking at some research that was sponsored by the regulator, the financial regulator in this country. At the end of 2023, they reckoned that 9% of the adult population of this country held cryptocurrencies. Now, if that's true here, it's true all around Europe. It's certainly true in America. This is very, very widely held. Now, so let's put that on one side. The other thing which is important to note is that in this recent market shakeout, Bitcoin has been immensely weak. I think in one day it lost something like $5,000 in its value. It's fallen from a high of $72,000 to a current level of about 55, having dipped down to 51 and change. So that is a mega downfall for something which is the currency of the future. At the same time, gold's decline has only been 3% from the top. So, but what you want out of a currency is stability. You don't want something that's just going to roar up and up and up and up. Because apart from anything else, it's not the currency that circulates, it's the credit which is created, which relates to the currency or to the money, if you like. Bitcoin is absolutely useless in that respect, because how can you build a factory? How can you do the business calculation to produce goods, which generally takes, you've got to set up the factory, you've got to buy the machinery, you've got to employ the people, you've got to do this, you've got to do that. Let's say, best guess, 5 to 10 years. What's the value of Bitcoin going to be, or credit based on Bitcoin going to be in 5 or 10 years' time? As a businessman, you cannot do the calculation, but you can do it with gold. You can do it also with paper currencies. Paper currencies happens to work in your favor because, you can sort of work out, or you can make an assessment as to what inflation is going to do to values. And that sort of underwrites the whole thing. This is why businessmen like inflation. But, if you're going to have something which theoretically is going to rise in value over the time when you draw down your investment in Bitcoin credit and you have to pay it back, you cannot do the calculation. It is completely useless. And therefore, any idea that Bitcoin will replace fiat currencies, or indeed be a modern equivalent of gold, forget it. If it actually came in, if it was, let us say, turned into into a legal currency by governments, we would go back to the Middle Ages, the pre-industrial revolution, because we would be completely unable to produce anything. So you can forget that. But the fact of the matter is that the price doesn't correlate, if you like, with the idea of its moneyness. It actually correlates with the NASDAQ 100 index. So in other words, what you're seeing is the same cohort of bulls in these high-flying tech stocks are exactly the same people who have bought into Bitcoin. And that, I think, tells the whole story. It's something which is merely a speculation. It is a bubble. It's been a wonderful bubble if you've been sensible enough to take profits somewhere along the line. But for those who have been buying when the ETFs came in, let's say, which is in the last year or so, it's, for a start, they're probably on losses now, and they'll lose a lot. In my view, I think it'll just go belly up. Bang. That's it. That's not good news.
In today's news recap, silver price returns to the upside as recession fears allayed. Silver price snapped a 3-session losing streak on Thursday as it rose by 1.2% in the European session. Silver is finding stability as the market repositions itself for impending interest rate cuts by the Federal Reserve. Most analysts opine that the sharp declines witnessed across the board this week was mostly panic-driven correction with no data to confirm recession claims. Markets returned to the upside in the last 2 days after flashes of Black Monday triggered panic. The recovery has shifted attention to the Fed with speculations of potential deep cuts of up to 100 basis points. This has restored confidence that a recession could be averted and could provide support for silver price in the coming days. The gray metals industrial demand outlook had recently taken a hit after disappointing economic data from China and the United States. The 2-hour chart below shows that silver price is currently on an upward momentum. Silver price will likely be on the upside trajectory if the action stays above the $27 pivot, as seen on the 30-minute chart. With the buyers in control, the pair will likely encounter the first resistance at $27.20. However, extended control could break past that barrier and send silver higher. On the other hand, a move below $27 will signal a shift of control to the sellers. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button so you do not miss out precious metals recaps.
The Dow closed, this is CNBC, closes nearly 300 points higher to snap 3-day losing streak. Run in broad relief rally. Relief rally, you know what that is?
Bullshit level, DEFCON 5.
You got it. It's called the fucking plunge protection team. You see what happened over there in Japan? Oh, yesterday they had their worst decline of the Nikkei in history. It was down over 12%. Oh, today though, it popped up 10.23%. How come? What the fuck changed? And again, this is like the first time they raised interest rates, like what, since 10, 12 years, 14 years, from zero. And Japan's been buying all these government bonds, trillions of dollars worth. The thing goes up 25 basis points and the fucking market goes to shit. Again, look at the data. The data's all there. And by the way, gold prices today went down another 21 bucks. You're looking at gold at what? 2,390. Again, when we made the forecast, it's still way up. It was $2,041 when we said this was a golden year for gold. And Bitcoin, we keep saying, they all saying it's going to die. It's going to, if it stays in the levels that we've been giving, and they're right there for everybody to see, we said it's going to keep going up. It hasn't gone near our breakout point. Again, it's not like what you want, what you wish, what you hope for. It's what is. And oil prices, you see Brent crude, $76, a little over that, a barrel of Brent. That shows you how weak the economy is. And you're looking at the stuff coming out. Airbnb shares dropped 14% on earnings miss as company warns of slowing U.S. demand. No shit. Hey, why don't you read the Trends Journal? We've been showing low consumer demand across the board. From the top, the fish rots from the head down. You had the Gucci's all the way down to the McDonald's. You got it? We are in the scope for the worst economic crisis in the history of the world, part 1 and part 2.
What do you think of their takes? Is Schectman spot on? Is Celente speaking facts? Post in the comments section down below your honest opinion. Subscribe if you've not yet done so. And watch this video right here because you'll love it. I'll see you on the other side.